The capital accounts of partners can be prepared by two different methods, that is through fluctuating and through fixed capital methods. Both these methods are fundamentally different on various accounts. So let us understand their point of differences or the differences between these two methods. The first basis is the number of accounts. In case of fluctuating capital accounts, there is only one account that is prepared, and this one account is the capital account. All the entries are passed through this particular account. Whereas in case of fixed capital accounts, we have two accounts, they being capital accounts and current accounts. All the entries related to capital or the capital balances are passed or entered into the current account, whereas all the adjustments are passed through the current accounts. I'll repeat that again. All the entries relating to capital are passed in the capital account, whereas all the adjustments are passed through current accounts. Coming to the adjustment part, it is passed through capital accounts, whereas in case of fixed capital account method, it is passed through current account. Fixed balances. In case of fluctuating capital accounts, all the entries, all the adjustment are passed through capital account. So there can be no fixed balance. It is not there. Balance is not fixed. Whereas in case of fixed capital account, under normal circumstances, that is in years where there is no introduction of additional capital or no permanent withdrawal of capital, the capital balances are fixed. So we have fixed capital balances. And lastly, we have credit balance. In case of fluctuating account, we can have credit balances and debit balances also. That is, there is quite a possibility that your debit side exceeds your credit side. Whereas in case of fixed capital account, it is only credit balance in capital accounts. In capital accounts, you will have only the credit balances since all the other entries are transferred to current accounts. So current account might have debit balances, but as far as capital accounts are concerned, they will always show credit balances. Whereas in case of fluctuating, you can have either credit or debit balances.